Yes, thank you. I guess first question is on the sell-through versus the sell-in expectations over the next couple quarters, and understand what you guys said on the revenue expectations for you that take into account some of the inventory adjustment that's going on. But what are your expectations for sell-through? Does it stay at this sort of down 20% year-on-year rate as we get into the 5G transition at the beginning of next year? What's embedded in the guidance?
Yeah, essentially what's in our guide is we are expecting the sell-through to remain low through the rest of the calendar year, reflecting, as we said, sort of some of the macro environment, but also really some of the pause before 5G ramps more meaningfully next year. So we expect that to remain low, and then the sell-in to start to converge towards that over the remainder of the year. And then that's just, as we said, compounded by the fact that there's been some channel inventory built in the first half that will bleed off. That's more of a Q3 probably factor.
Okay, that's helpful. Thank you. As a follow-up, I guess we understand that you're hoping to get a stay in the FTC ruling. Could you lay out for us, what the contingency plans are in the event that a stay is not granted? What are the steps that would need to be taken, and what would be the financial impact of having to take those steps, before appeal is finally decided?
Hi, of course, this is Don Rosenberg. So as you know, we're smack in the middle of the Court of Appeals reviewing our motion for a stay, so we're limited in what we can say about that. But I should point out, I don't think it's missed your eyes, that there's fairly widespread consensus that Judge Koh's order is erroneous in many, many respects. And the fact that the United States, through the Justice Department, with the support of the Department of Defense and Department of Energy, have filed a brief, a statement of interest rather, in support of our motion to stay, in which, among other things, they objected both to the remedy, but also indicating that they think we're going to be successful on the merits. In addition, the Court of Appeals has expedited their review of our appeal on the merits. And so I think we're very encouraged by this kind of support. We think, as I said, that there is a widespread view that our chances are very good. So we're kind of at the point where we want to wait for that decision on the stay, and then proceed from there.
This is Alex. I'll just add very quickly, one of the, I think, fundamental points that can't be missed is that the current agreements are valid and enforceable. Even the FTC has weighed in and said that the agreements are not nullified, and so that's very important. In addition, we have a couple of what I would call anchor agreements that are very good agreements that we're quite happy with, and that's Samsung and the recently signed Apple agreement. And as I said, our IP position is very, very strong through 4G and ramping into 5G.
Thank you. Our next question comes from the line of Blayne Curtis with Barclays. Please proceed with your question.
Hey guys, thanks for taking my question. I was wondering if you could comment on Apple's purchase Intel's modem, and then as you think longer here, it sounds like Huawei's focusing more on post this ban or attempted ban here, focusing more internal on their modem. I know you've shipped to a portion of that, so I'm kind of just curious. Any view on how this Apple purchase affects the $2 you guys talked about, and then if you can just comment on Huawei and if they gain share and do more insourcing, the opportunities for you as you go into 5G.
Blayne, this is Steve. I'll handle the first one, and Cristiano I think is going to jump in on the Huawei question. I would say in terms of the recent news flow, I think that was pretty highly anticipated. It was clearly anticipated in the agreement that we did. Remember, we did two agreements, a patent license agreement as well as a product agreement, multi-year product agreement. We don't see anything changing in terms of our ability to deliver on those agreements, and we think it still remains a pretty competitive or at least an attractive competitive dynamic for us when you look at the industry and our roadmap versus others, even after those agreements expire. And I think very clearly, in answer to your question, we don't see any impact to the $2 number that we have put out there.
Hi, this is Cristiano. So on the Huawei, Huawei has been now a number of years that their premium and high tier has been focused on their own silicon. I think our shipments to Huawei are always like in the mid to low tier. But I will look at the Huawei focus on China a little different. I think it creates an opportunity for our customer base coming out of China, companies like Vivo, Oppo, OnePlus, and Xiaomi. Outside China, especially in Europe, that's accretive to us, especially on the 5G transition. And we looked at opportunity that's probably permanent, not one time. I think the interest on the European carriers have been very high. And when some data came out that we're very pleased and show, since we're kind of generations ahead on our 5G chip, I think the latest report showed that the Huawei modem is at least 50% bigger in area than the first generation QCT, and I think we had compete, with many other companies throughout the years, and we're optimistic about the lead we have on 5G, and hopefully that will drive a good transition for us with our customers in China, including competing with Huawei domestic as well.
Thank you. Our next question comes from the line of Samik Chatterjee with J.P. Morgan. Please proceed with your question.
Hi, thanks for taking the question. I just wanted to start off with kind of a question on 5G. You're clearly excited about your position in 5G, but as we kind of think about the impact on the smartphone industry, you're expecting volumes to improve, but lowering the cost of the solution also is probably going to be a big driver. So how are you seeing kind of progress on that front? And just as a follow-up, I think you mentioned kind of 20 operators you expect to launch 5G. Can you just help us think about the mix of sub-6 versus millimeter wave? And you mentioned you expect millimeter wave to be mandatory. Kind of what's driving your view there, given what we hear is the infrastructure is not really ready to support millimeter wave in most geographies yet? Thanks.
This is Steve. Maybe I'll take the first one, and Cristiano will jump in a bit on the RF components. I would say I would look at 5G rollout in general has a higher intensity and a more global nature than what we saw even in 4G. So the pressure that we are getting to accelerate not only the premium tier but also higher tier devices is pretty immense. If you were to look, China Mobile came out with a data point that said essentially 2,000 RMB devices, roughly a $300 phone. That'll be where they're going to target the 5G line next year. Pretty substantial by the end of the year. That is that pretty substantial move. I would expect at the beginning of the year, which is what we're really focused on right now, you'll start to see that line be somewhere close to the 3,000 RMB. So roughly $430 price point. That's pretty significant actually, and it's anticipated in our roadmap. In terms of our integration, you may have seen us, and remember that we have talked about how we have been moving for our 5G into an integrated roadmap even more quickly than we did in 4G. Now, two things happen to us that I think are beneficial in addition to just the good dynamics that happen when you have transitions in technology. One is, because the complexity of 5G goes up, the ASP of the baseband, we tend to have an attractive move just from the ASP of the baseband alone, tier to tier. So 4G, same tier, to 5G, same tier. The ASP of the baseband is good for us. Secondly, we see a strong opportunity in the RF to grow the content of the device. As you know, we've had a strong traction there, in part because the importance of wrapping the system design around the antenna. You will see, consistent with the design that I mentioned, or the feature that I mentioned, dynamic spectrum sharing, you will see an opportunity to extend those 5G RF design opportunities into the legacy 4G bands as they are effectively dynamically reformed with that feature. So we see a continued roadmap for us to continue to grow content per device, and that's why we've been investing so heavily to put that in place. It's in place now, and the real activity for us is how quickly can we get this to ramp, and can we do it worldwide. So we're pleased with that, I would say, the dynamics, and we have a lot of visibility into that. We have a lot of confidence that we think we're going to be able to do it.
Hi. So, Cristiano, just to answer your question about sub-6 and millimeter wave mix. So, millimeter wave right now is a requirement across all the main carriers in the United States. I think we saw phones, getting launched with millimeter wave. And in 2020, we'll see that in Korea and Japan. So if you look at the developed economies, I think the Japan market, Korea market, and the States market require millimeter wave. That will be high attach in terms of the total 5G volumes. But it's not stopping there. So Europe, that is launching with sub-6, millimeter wave has been already auctioned in Italy. And it is now likely to get, licensed in the UK as well. So 5G has really been designed for, the combination of sub-6 and millimeter wave, and we are optimistic about millimeter wave attach increasing. One other thing to mention is sub-6 in general, we will see in 20 a lot of reforming of existing spectrum because of the dynamic spectrum sharing, technology. So that also creates opportunities for us to expand our RF front end that today is focused on 5G, these new sub-6 band and millimeter wave, to also add the reform bands. So, and that's how we think about the RF.
Thank you. Our next question comes from the line of Tal Liani with Bank of America. Please proceed with your question.
Hi, guys. When you say that there is slowdown in 4G versus 5G, is it only China specific, or can you give the global context of this comment? It's just hard for me to believe that there is any slowdown in Europe or the U.S. because of 5G, so I want to understand it. Second, can you comment on the relationship with Apple post the acquisition of Intel's modem business by Apple? How do you view it, and where do you see yourself kind of in the future playing with Apple? Kind of how do you work with Apple, given that they're going to have a modem asset in-house? Thanks.
This is Dave. I'll start. So let me start with China. We are seeing a pause or a slowing in terms of 4G orders in advance of 5G in China. Really, there's as we referenced, a number of dynamics going on in China right now. There is sort of a realignment of the sell-in towards the lower sell-through growth rate, so some compression on growth rates in the back half of the year. The channel inventory being drawn down, and so headwinds for the OEMs in terms of the market in China in the back half of the year. And then what we're seeing is an element of the softness in the sell-through market really being attributable to more high and premium tier segments of the market pausing before 5G. So we are seeing that some of that pause before 5G and a desire by some of our OEMs to try to accelerate efforts to bring 5G into the market. So seeing that there. Outside of China, we referenced lengthening replacement rates in developed markets like the U.S. And Europe, and so we think a little bit at play there as well in terms of some pause again at sort of the higher tiers in advance of 5G.
And Tal, this is Steve. With respect to Apple, I think the relationship is quite good. What really characterizes it now is the 100% of the intensity is about how do we get products out together. Very natural, I think, for both companies. We and I think both sides really anticipated that there would be some announcement like you've seen, but it hasn't changed the way in which we move forward. We're used to that, and the real effort is how do we get products out together, and I think that's a very healthy relationship.
Thank you. Our next question comes from the line of Ross Seymour with Deutsche Bank. Please proceed with your question.
Hi, guys. I want to talk about the 5G side. You're clearly excited about the first half of next calendar year. Can you talk a little bit through, do you think it's going to be more of a unit demand environment where that's really going to rise, or is there going to be more of a substitution effect there, and people on the sell side and buy side should more focus on that 1.5x increase in content that you talked about, Steve?
Yeah, Ross. I think as we look out over the next year in the transition to 5G, we don't really look at it in terms of being a unit growth story where the market units increase. What we really see is, in a flat market, the transition over to 5G creating an opportunity for us by the fact that our monetization per phone is going up, as Steve referenced, as we see higher ASPs associated with complexity, as well as the capture of 5G RF front-end content. And so it's really more about that as a growth driver for us as we head into the first calendar quarter next year and on into the rest of fiscal 20.
Ross, this is Cristiano. I'd like to add the following. It's when you look at the first half, just the launch of 5G by the operators and how unlimited data plans starts to move to the 5G devices, we'll see that replacement, and with that you do see this 1.5 factor coming in as we go content and RF front end. Over time, it's hard to make predictions, but we've seen this with every different transition. As some of the new services, whether video or gaming or streaming gaming, starts to become more popular and device form factor changes for larger screen, you could see the market growing faster than single digits, but we're not making that assumption, for 2020.
That's helpful. I guess as my follow-up question, sticking with the China theme in general, can you give us an idea, whether it's your QCT revenues or the MSMs, any sort of even rough estimate about the percentage of those that are associated with China? Because the year-over-year growth rates you're talking about, or declines in this instance, are quite acute. I know in the September quarter you had 14 weeks last year and some things have changed and you walked through the inventory dynamics. But even if I adjust for those, it seems like you're down the better part of 15-20% year over year. So to the extent China is such a larger exposure for you, can you just talk about how big is it, and is there anything you can do to help mitigate these sorts of booms and busts as we go into that first half of 2020 when the 5G ramp could lead to this same sort of volatility?
Yeah, a quick comment on year over year. So if you look at where we are year over year, there's a couple of factors that affect the decrease or the reduced level of revenues. One, I would remind you that last year there was significantly more Apple in our business versus the current quarters. So that's a meaningful portion of the decrease in revenues on a year-over-year basis. We also had some low-end share loss, over the last year that had some contribution to the reduction as well. But Apple a big part of it in terms of QCT. Yeah, on the QTL side, just to highlight it, in the year ago quarter we had $500 million from Huawei compared to $150 million in the current quarter. So overall, that contributes to the comparison also.
And I would just add one. This is Steve. I'd just add one thing. I think you have an unusual event here, which was the reaction of Huawei to the ban and how it retrenched into China. And I think that was a very unusual share shift that obviously we got impacted probably more than other folks just because the tiers and the OEMs that were impacted are ones that we tend to monetize. We think that gets back in a more normal position, kind of snaps back the other way with the launch of 5G. And, hopefully we wouldn't have a one-time event like that, but it should be more stable post that big ramp with 5G.
Thank you. The next question comes from the line of Matt Ramsey with Cowen. Please proceed with your question.
Yes, thank you very much. Good afternoon. A couple of additional questions on China, one from each side of the business. I know Steve or Cristiano, I know you've talked a little bit about the Huawei retrenchment and the impact on QCT units. It's been topical that obviously China, after the Huawei entity list stuff and other factors, has maybe focused more as a country on indigenous development. Have there been any movements for high silicon to supply any other OEMs in China or for OEMs broadly to source from China? And then on the QTL side, since Judge Koh's ruling, any change in compliance with Chinese OEMs outside of Huawei that we should note? Thank you.
Thanks for the question. Look, I think the way to think about it, Huawei had a sudden change in their phone landscape, especially what happened in Europe. I think there was a drastic reduction in demand, and I think that causes them to be very focused on China because that's the place they could be focused on. I think the big picture answer to your question is China has many initiatives, and the initiatives of China is not only about China domestic market, but also how the Chinese mobile ecosystem grow outside China. And what we have seen, it's our relationship with China remains very healthy and is expanding. And in addition to the relationship with Vivo, Oppo, and OnePlus as they range in Europe, we recently signed an agreement with Tencent talking about content in 5G use case development. And I expect that the relationship between QCT and China in the 5G era will continue to be healthy because we help the expansion outside China, and that's how we look at it. We don't see any signs today that the dynamic is changing.
And then this is Alex. On the QTL side, there was, as we've referenced, one incident that would have affected compliance, and we engaged very rapidly on that, took it very seriously. But as you can see, as of the end of the reporting here, we've got good compliance.
Thank you. Our next question comes from the line of Stacy Rasgon with Bernstein Research. Please proceed with your question.
Hi, guys. Thanks for taking my question. I wanted to ask about the QCT trajectory. So I know you're talking about inventory flush and some of the weakness and everything else, but at the same time, if I look at your forward guidance on chipsets, I mean, you've been missing for the last several quarters. So why all of a sudden is it inventories and a pause in front of 5G versus just a continuation of the trend that we've already been seeing for the last 3 or 4 quarters? And for my follow-up, I just want to know, do you guys think 5G overall is accretive to licensing revenues? I mean, you lowered the rate when you included it. You have the ASPs capped. It doesn't sound like you're looking for incremental unit growth for the market for 5G. So how do we think about 5G's impact on the run rate of royalty revenues, given where it is today? Thank you.
Hey, Stacy. So with respect to the QCT side, first of all, I would make the comment that stepping back over the course of this year, I think with the recent 100 million unit reduction, we've seen a sort of a continuing erosion in the handset market over the course of this year. So this has been something that has been a headwind for the business, I think, for the last several quarters. And so I think that's been a dynamic that has been impacting, MSM units, as well as sort of the overall business. I think what we saw what we're seeing now is maybe a little more pronounced growth impacts on the back half of the year as, again, we go back to the sort of the sell-through rates remaining down in China, and the sell-in rates really not yet aligned with that. So realignment there, the fact that they weren't aligned in the first half, resulting in some channel inventory build. So really more market dynamics in terms of pressure on units. As we said, a little bit of share loss at the low end, not financially significant. And then the more, I would say, unique situation with Huawei really entrenching and focusing on the domestic China market and really putting their attention there and grabbing significant share. So that's a little bit more of a unique situation to what we're seeing right now. But I would say a lot of it really is attributable to the market headwinds that we've been frankly seeing all year long. And then QTL, with respect to how to think about that as a 5G as an upside. A lot of the agreements we sign are for 4G, 3G, 4G, 5G, and so really we look at it as just continuation and extending of the the monetization of the handset market as it evolves from 4G to 5G, just like we did from 3G to 4G.
Thank you. Our next question comes from the line of Mitch Steves with RBC Capital Markets. Please proceed with your question.
Hey guys, thanks for taking my question. Just had a quick one, just kind of turning back to like kind of the ASP expected if we're going to ramp 5G faster. So I guess two parts. So first, does this mean that essentially we're going to see kind of a bigger pause in smartphone shipments, and then that's going to increase demand for the kind of the 5G shipments out in 20? And then secondly, if that's not the case, what should we think about as a kind of a normalized unit base for the smartphone industry at this point?
Yeah. So in our comments when we talked about the 100 million unit reduction, we kind of gave a sense it's 1.7, 1.8 billion units in total. We indicated that now translates into a handset market being down sort of mid-single digits year over year. And so if you step back over the last number of years, it's been a relatively flat handset market. So down a little bit as we see some of this pause and some of the the macro environment impacts affecting us. So we don't really see any sort of changes in the overall unit market beyond the comments that we made.
Yeah, just to clarify real quick, I think I did a good job asking that question. I was referring to more to 2020. So essentially, if people are pulling down the numbers for this year, does that mean essentially 20 should be up like 7 or 8 to kind of offset this being more of a down year, or is that too early to call that?
Yeah, probably too early for us to call what we'll see in 20. But I think we would expect to, as we said, see an inflection beginning in the first calendar, so it would be our second fiscal quarter. With 5G launches happening more significantly in China, as well as other flagship device launches at a Mobile World Congress and things like that. And then sort of building over the course of the year as we think about moving towards really more flagship launches happening in the fourth fiscal quarter.
Thank you. Our next question comes from the line of Rod Hall with Goldman Sachs. Please proceed with your question.
Yeah, thanks for fitting me in, guys. Just a couple things. I wanted to ask, kind of deviate from all the demand stuff and just ask Steve if you could update us on the CFO search, kind of what the status of that is. And then I also wanted to come back to just the demand stuff, just to kind of clarify what information you're acting on. So are you seeing did you see deterioration of demand through the quarter? Could you just kind of talk to us about what sort of data points you've seen here and how they came to you? Did things weaken toward the end of the quarter, or they just remained weak, or kind of give us some idea of what trajectory looked like to you? Thank you.
Rod, hi, it's Steve. We continue to look. Nothing to announce right now, but we'll keep you updated.
Then with respect to the sort of how things have unfolded, I guess more recently. So one, I think we track like the CNOMR report. I mean, we track that like probably a lot of others in terms of watching what's happening with the sell-through. And so we've seen that continue to be down even through the June quarter with really no significant movement away from that trend. And then we look at that relative to kind of where we see handset demand coming in with respect to sort of our own data points around the market. And so we look at it from that standpoint. We look at our demand profiles coming in from customers in QCT and factor that into the mix as well. And and that's where we've seen some of the the pullback that we talked about with respect to 4G units.
Yeah, this Cristiano, I think I mentioned this briefly before. We saw some phone model cancellations, which is on the 4G second half launch. So that's an indication. It's they wanted to accelerate the 5G, and that's a unusual metric to having the phone model cancellation on the 4G side.
Thank you. Ladies and gentlemen, that concludes today's question and answer session. Mr. Mollenkopf, do you have anything further to add before adjourning the call?
Well, thank you. I just thank everyone for joining us today, and maybe just to the employees of Qualcomm, thank you for the good quarter. We have a lot of work ahead to launch 5G. It's a big opportunity for the company, and look forward to the next several quarters. And a lot of work to do, but I think a great opportunity for us. Thank you.
Thank you. Ladies and gentlemen, this concludes today's conference call. You may now disconnect.